Thank you for tuning in to Simplified and welcome to Accounting for Issue of Shares Lesson 3. Lesson 3 is going to touch on forfeiture of shares. It's not a given that when a company issues shares, subscribers are going to be able to make payments throughout the core stages. There are some shareholders who will fail to make payments for shares. Forfeiture of shares. Forfeiture means lost right due to a breach in contract. Forfeiture of shares means cancellation of shares of a shareholder who would have failed to make payments when required. Things to remember. These are the things that we have covered in the first lesson and second lesson, which we will also apply in this lesson. You will notice that forfeiture of shares accounting will cover all the things that we covered in the previous lessons. Always remember to debit bank account with all monies received and credit the respective stage account. Obviously, the reverse is true for monies reversed or rejected. Number 2, always remember to reduce allotment monies with value of excess monies received on application. Number 3, share capital issued is always recorded at par on the credit side and debit the respective stage account. Number 4, share premium as a credit balance, debit the respective stage account with value of the share premium. Number 5, share discount is a capital loss and is a debit balance. Share discount, if insignificant, could be written against the profit and loss account or even the share premium. However, if the company considers that the share discount is of a significant figure, they might decide to create a share discount account which has an effect on the total equity of the company and should be recorded on the equity side to reduce the total equity balance. Forfeited shares accounting. Debit share capital account with the par value of the forfeited shares and credit forfeited shares account. The purpose is to reduce our share capital in issue so that we take care of the shares that we have been taken back by the company. Debit the forfeited shares account and credit the allotment or core accounts with the amount that was to be received by the company at that point if the shares were not forfeited. I will repeat. Debit forfeited shares account with the amount that was to be received by the company at that point if the shares were not forfeited, and credit the respective allotment or core account. Credit share capital account with the share value at par and debit the new shareholder account. Debit bank account and credit the new shareholder account with money received. Debit the forfeited shares account with the balance in the shareholder account, which is the discount on the forfeited shares, and credit the new shareholder account. Illustration 1. AB Limited issued 10,000 ordinary shares of $2 each, payable 30% on application, 35% on allotment, and 35% on first and final call. The shares were applied and paid for, except for Smith, who failed to pay 1,000 shares allotted to him. The shares were forfeited and reissued to Mendes at $1.90 per share. Assume all conditions were satisfied, record the respective ledger accounts. I would encourage you at this juncture to pause this video and try to solve this question using all the information on this page and the information that we covered in the things to remember section. So for the solution, before I show the solution, maybe we might need to look at the question and try to see the important points that we need to master before we go any further. First, we know that 10,000 shares were issued at $2. Therefore, we do not have share premium or share discount in this illustration. 30% is payable on application, 40% on allotment, and 30% on first and final call. However, we are told that Smith failed to pay 1,000 shares allotted to him. So on allotment, we need to take away this 1,000 on whatever the company received from allotment monies. We will say 10,000 less 1,000 to give us $9,000. The 9,000 is what the company received on allotment. We are also told that the shares were later reissued to Mendes at $1.90. Therefore, the company received 1,000 multiplied by $1.90 from Mendes. Now the solution. For the solution on this first illustration, I have separated the application and allotment account so that it becomes easy to try and master this concept before we get at a point where these accounts are combined. So first and foremost, we are going to look at the application account. We do remember and know that we always debit bank account with monies received and credit the respective accounts. So ideally, we will need to debit bank account with 30% received on application multiplied by $2 being the price per share multiplied by the number of shares issued 10,000. So bank account debit side, narration application monies 30% times 2 times 10,000 to give us $6,000. Double entry, we go to the application account. Credit side, we say narration bank 30% times 2 times 10,000 to give us $6,000. Next, we know that we need to credit the ordinary share capital account with the value of shares issued at that stage. So the double entry will be debit application account with ordinary share capital, 30% received on application times $2 price per share times 10,000 shares issued to give us $6,000. So we go to the ordinary share capital account and record application monies 30% times 2 times 10,000 to give us $6,000. Next, we go to the allotment account. This is where all the trouble starts. On allotment account, we are told that at this stage, this is where Smith failed to pay for his shares. First, we need to record our ordinary share capital as it would appear if the shares were all paid for. So we debit our allotment account with ordinary share capital, 40% which was received on allotment multiplied by $2 multiplied by 10,000 to give us $8,000. Double entry, we go to the ordinary share capital account, record on the credit side allotment 40% times 2 times 10,000 to give us $8,000. Now we need to factor in the 1,000 shares which Smith failed to pay for. First, we noted that the monies that the company received at that point were less 1,000 shares because Smith failed to pay. So we will say 10,000 less 1,000 to give us 9,000. So on the credit side on allotment, the company received narration bank 40% multiplied by $2 multiplied by 9,000 to give us 7,200. Double entry, we go to the bank account debit side allotment 40% times 2 times 9,000 to give us 7,200. At this point, we have a forfeited shares entry of 1,000 shares. So at this point, we will go to our forfeited shares accounting notes and look for a point which reports on the treatment of these forfeited shares on allotment. So point number 2 says debit forfeited shares account and credit allotment or core account with amount that was to be received by the company at that point if the shares were not forfeited. So we are going to credit our allotment account, narration forfeited shares. The amount that was to be received is 40% times 2 times 1,000 to give us $800. Double entry, we debit our forfeited shares account, narration allotment 40% times 2 times 1,000 to give us $800. Next, we go to the first and final call account. Again, we need to record our ordinary share capital as if all the shares were paid for. So we will simply say 30% paid on first and final call. So 30% times 2 times 10,000 to give us $6,000. Double entry, ordinary share capital account, first and final call, 30% times 2 times 10,000 to give us $6,000. Again, we note that the company did not receive payments for 10,000 shares because Smith failed to pay 1,000. Therefore, we remain with 9,000 shares paid for on first and final call. Therefore, we will say 30% times 2 times 9,000 to give us 5,400. Again, we go back to our point number 2, which says debit forfeited shares account and credit core account with amount that was to be received by the company at that point if the shares were not forfeited. So we credit our first and final core account, narration, forfeited shares, 30% times $2 price per share times 1,000 shares forfeited to give us $600. Double entry, we go to the forfeited shares account, narration, first and final call, 30% times $2 times 1,000 shares to give us $600. Now we go to our first point on forfeited shares accounting, which says debit share capital account so that we reduce our share capital with the forfeited share capital. So we will debit share capital account and credit forfeited shares account with the par value of the forfeited shares. So we go to our ordinary share capital account, narration, forfeited shares, number of shares 1,000 multiplied by $2 price per share to give us $2,000. Double entry, we go to our forfeited share account, credit it with ordinary share capital account 1,000 multiplied by 2 to give us $2,000. Next point, our shares were reissued. So we are going to first look at crediting share capital account because the shares have been reissued. So we need to again increase our share capital by crediting the share capital account and debiting the new shareholder account with share value at par. So we will go to our ordinary share capital account, credit it with the shares reissued. So Mendes forfeited shares issued 1,000 times $2 to give us $2,000. Double entry, we go to the new shareholder account, which is Mendes shareholder account. We debit the account with ordinary share capital $2,000. Next, we need to debit bank account and credit the new shareholder account with money received. So we will go to the bank account. We debit it with Mendes forfeited shares 1,000 times $1.90 because the shares were issued to Mendes at $1.90 to give us $1,900. Double entry, we go to Mendes account. We credit Mendes account with bank narration 1,000 times $1.90 to give us 1,900. At this point, we can notice that there is a difference on the debit side of Mendes shareholder account and the credit side. This difference has been noted on the last point in our forfeited shares accounting. The last point says debit forfeited shares account and credit shareholder account with balance in the shareholder account, which is discount on forfeited shares. So in this case, we have a difference of $100, narration discount on forfeited shares. Double entry, we go to our forfeited shares account, we record it, narration discount on forfeited shares $100. So at this point, we are done with our accounting notes. We would now need to look into our accounts to see if they are in balance. Application, allotment, first and final core accounts. We said these accounts always balance off. So they are in balance 6,000, 6,000, 8,000, 8,000, 6,000, 6,000. Next, we have the bank account. We do not have anything on the credit side, so our balance carried down will be 20,500. Next, we go to the forfeited shares account. which has a bigger credit side of $2,000. So the difference will be 800 plus 600 plus 100 less 2,000 to give us a difference of $500. $500 is profit on a reissue of shares. So these funds are transferred to the capital reserve account. Next, we'll go to the ordinary share capital account, which is 6,000 plus 8,000 plus 6,000 plus 2,000 to give us 22,000. Balance carried down 20,000 because we have a debit entry of $2,000. Mendes shareholder account is balanced off with $2,000. Therefore, we need to prepare a statement of financial position extract where on the debit side we have current assets with the bank. On the equity side, the credit side, we have ordinary share capital of 20,000 and capital reserve of $500. So there we are with the simplest forfeited shares accounting. Next, we are going to look at another illustration. This time we are going to be combining the application and allotment accounts. So our illustration 2 question reads, AB Limited issued 20,000 shares of $2 each at $5 payable, $1.20 on application, $3.40 on allotment including premium, and 40 cents on first and final call. 27,500 applications were received, 2,500 applications were rejected, and the remainder were allotted on a 4 for every 5 applied for. 1,000 shares were reissued to Mendes at $1.90 per share after Smith failed to pay the allotment when called for. Assume all conditions were satisfied. Show the following ledger accounts as they would appear in a B Limited account. Application and allotment account, first and final call account, ordinary share capital account, share premium account, forfeited shares account, bank account, balance sheet extract, and Mendes account. So before we present the solution, there are points that we need to take note of. First, we have a share premium of $3 being $5 less $2 because our shares were issued at $5, so we have a share premium of $3. Next, we are also told that on allotment $3.40 was paid including the premium, which means of the $3.40, $3 is the premium and 40 cents is the share capital. Additionally, we are told that 27,500 applications were received, 2,500 applications were rejected, which leaves the organization with 25,000 applications, which were allotted on a 4 for every 5 applied for. So, like we did in the first and second lessons, if you are faced with a situation where some applications are returned but the remainder are allotted on a fraction, we simply say 4 divided by 5 or the fraction multiplied by the remaining applications, they will take you back to the issued shares. So in this case, we are saying 4 divided by 5 multiplied by 25,000 will give us 20,000 shares. Of the 20,000 shares, 1,000 shares were reissued to Mendes. So it means at allotment stage, the company only received money for 20,000 shares minus the 1,000 shares which Smith failed to pay for. So the company received money for 19,000 shares. So we now need to look at our solution. And for this illustration, I have combined the application and allotment account. Like we said before, the bank entries are always separated in this account so that we will be able to take care of the excess monies on application. So first and foremost, we need to debit bank account and credit the respective accounts with monies received at that stage. So firstly, we debit bank account with application and allotment. First, we have application. 27,500 applications received multiplied by $1.20 being monies paid on application. We will simply say 27,500 times $1.20 to give us 33,000. Double entry, we go to the application and allotment account, credit it with Narration Bank, 27,500 times $1.20 to give us 33,000. Next, we have the allotment monies received. Remember, we said on allotment, the company issued 20,000 shares. Of the 20,000 shares, 1,000 Smith failed to pay on allotment. Therefore, the company received money for only 19,000 shares. So we will go to the allotment stage. 19,000 multiplied by $3.40 less the excess monies on application. So the excess monies on application will be 5,000 multiplied by $1.20 to give us 58,600. Double entry, we go to the application and allotment account. Bank 19,000 times 3,400 less 5,000 times $1.20 to give us 58,600. Next, we need to record the value of share capital received. So share capital always has a credit balance. Therefore, we debit the respective stage accounts. So firstly, we have application and allotment. So on application and allotment, the ordinary share capital is always reported combined. So in this case, we have $1.20 on application and 40 cents on allotment. Remember, we said $3 is the share premium, therefore 40 cents is the part of ordinary share capital. So if we say $1.20 plus 40 cents, we'll get $1.60 multiplied by 20,000 to give us $32,000. Next, we need to take care of the refunds that were done. We are told that 2,500 applications were rejected. So we will record on the debit side of the application and allotment with refund and the credit bank account to reduce on monies received. So narration refund 2,500 times $1.20 to give us 3,000. Double entry, we have a bank refund of $3,000. Next, we need to record the share premium because it was received on allotment stage. The share premium, remember, only 19,000 shares were paid on allotment. Therefore, we will simply say 19,000 multiplied by 3 to give us 57,000. Forfeited shares, we go to point number 2, which says debit forfeited shares account and credit allotment account with amount that was to be received by the company at that point if the shares were not forfeited. You go to the application and allotment account. You credit the application and allotment account with narration forfeited shares account. 1,000 shares that were forfeited multiplied by 40 cents, which should have been received, yet the shares not been forfeited. We will simply say 1,000 times 40 cents to give us $400. Double entry, we debit the forfeited shares account with allotment 1,000 times 40 cents, $400. Next, accounting entry, we need to take care of the first and final call monies. Debit bank account, credit respective stage account. So we'll simply credit first and final call account with narration bank. 40 cents we are told was paid on first and final call. So we'll say 40 cents multiplied by 19,000 to give us 7,600. Double entry, we go to the bank account, first and final call, 40 cents times 19,000 to give us 7,600. On the first and final call account, we need to record the ordinary share capital. Remember, we said our ordinary share capital is always recorded at par. So we say 40 cents times 20,000 to give us $8,000. We do double entry. We go to the ordinary share capital account, first and final call, $8,000. Again, we need to take note of point number 2 on our accounting notes, which says debit forfeited shares account and credit the core account with amount that was to be received by the company at that point if the shares were not forfeited. So we go to our first and final core account, we credit it with 1,000 times 40 cents to give us 400. Double entry, we go to forfeited shares account, first and final core, $400. Next, we go to the first point on our accounting notes, debit share capital account, credit forfeited shares account with the par value of the forfeited shares. So we go to our ordinary share capital account, we debit it with $2,000 being forfeited shares, 1,000 shares multiplied by 2. Remember, our shares are always recorded at par, so $2 is our par value to give us $2,000. Double entry, we go to our forfeited shares account, we credit the account with narration ordinary share capital $2,000. Next point, we credit share capital account and debit new shareholder account with share value at par. So we go to our ordinary share capital account, we credit it with forfeited share issue, Mendes $2,000. We now need to record the double entry by debiting Mendes shareholder account, narration ordinary share capital value $2,000. Next, we need to record the monies received. We are told that Mendes paid $1.90 per share. So we will debit bank account and credit the new shareholder account with monies received. So we will go to bank account. We debit bank account Mendes forfeited shares 1,000 times $1.90 to give us 1,900. Double entry, we go to Mendes shareholder account. Bank narration 1,000 times $1.90 to give us 1,900. Lastly, we are told that the debit balance on the shareholder account is a discount which needs to be debited to the forfeited shares account and credited to the shareholder account. We will see that on our new shareholder account, Mendes account, we have a balance of $100. So we credit the account with narration discount on forfeited shares issued $100. Double entry, we debit forfeited shares account with discount on forfeited shares $100. So that's it with our accounting notes. Now we need to check if our accounts are in balance. First, application and allotment account balanced off with 92,000. First and final core account balanced off $8,000. Bank account, we have a balance of 98,100, which is the balance carried down. Forfeited shares account, we have $2,000 on the credit side, and we have 400 plus 400 plus 100, which is $900. The difference is 1,100. This is a capital reserve being profit on reissue. Next, we have ordinary share capital account with a balance carried down of 40,000. Remember, we said our shares are always recorded at par. Next, we have the share premium account, which is a credit balance of 57,000. And lastly, we have the Mendes shareholder account, which balanced off with $2,000. Lastly, we need to look at the statement of financial position extract. So on the debit side, we have current assets bank with a balance of 98,100, which is shown here. On the credit side, we have equity, ordinary share capital 40,000, share premium 57,000, capital reserve 1,100 to give a balance of $98,100. So there you are with solving forfeited shares accounting. This is as hard as it gets and as simple as I have simplified the workings. So here is the solution on a wider screen so that you will be able to see the figures on a clearer screen. So I have prepared a dessert for this lesson. On the dessert, we are going to touch on rights issues. Rights issues, basically, these are rights given to existing shareholders to subscribe to some shares for the company. Normally, a company does a rights issue when it wants to raise capital but does not want to have a dilution on the shareholders' value and also to minimize on the expenses on issue of fresh shares on the market. So when you are doing accounting entries for a rights issue, all you need to do is debit bank account as usual with value of monies received and credit the share capital account or as well as the share premium account in the event that there is a share premium. Now on the bonus issue, a bonus issue, this is a process where a company issues shares to the existing shareholders on a pro rata basis. However, the shareholders will not need to pay anything for the shares. So accounting for bonus issue, you simply need to debit the reserve account that the company has taken money from to provide for the bonus issue and credit the bonus share account. You need to debit the bonus share account and credit the share capital account. So basically, this is where our lessons end on accounting for issue of shares. Please subscribe to my channel. If you like my lessons, please click the like icon and share with your classmates and stud buddies. Otherwise, thank you and goodbye.